At this point in time, let's toss it back and we'll now pass the baton to our colleague and our co-anchor in Singapore, Haslinda Amin, of course. That's it from us here on The China Show. All yours. Take it away.
Well, that's right, David. As you said, Li Qiang pushing back on what's been happening. I mean, of course, this summit Davos happening at a time when tensions have been rising between China and the U.S. as well as the EU, talking about potential tariffs on EVs out of China. So a very challenging time for China as this Dalian forum kicks off today. Let's get perspective from our Bloomberg Chief North Asia correspondent, Stephen Angle, who's right where the action is. And Steve, I mean, all the messaging from Li Qiang, not surprising at all.
No, not surprising at all. I think it's similar messaging that we've gotten from the central government, essentially painting the small yard, high fences mentality of the West as being detrimental to having an open global economy to combat the rising challenges in the world, whether that is obviously by very definition protectionism, but also, of course, they mentioned the rise of new technologies in AI and climate change. So, again, Li Qiang saying the right things, but again, as often, the case, it's all in the execution of these policies. Li Qiang is saying China can be an open and is an open platform for entrepreneurs and innovators to grow their businesses, and that they are open to business, open for business for foreign companies. Again, he also did say that China is on path, even though much has been made, including on this network, Bloomberg, of the troubles in the Chinese economy to the start of the year, but says that they are confident that the economy can reach that growth target that they set at the National People's Congress of around 5% growth this year. So, yes, there are lots of challenges. We know it. The world is becoming more bifurcated. But Li Qiang says if we work together, it does not necessarily have to be a zero-sum game, and that we can work together to tackle the problems we all face. So, again, similar brushstrokes that we've heard from Li Qiang in the past.
Well, Li Qiang is confident that 5% GDP growth target for the year, but still there are concerns it may not get there. And Steve, the timing of this summit Davos is pretty interesting as well. It's really coming real close to that plenum meeting where traditionally we've had a 5-10-year plan for China.
Yeah, we're essentially waiting for the third plenum to be held in Beijing next month. So we're trying to get some clues as to what the policy priorities will be for the long term. And clearly it's going to be in innovative areas. Xi Jinping has talked extensively about new productive forces and high quality development. And essentially the new three that they have talked about are solar panels, EVs, and batteries. But again, those developments and the overcapacity claims by the West, including the United States, has led to what China would say is a rise of protectionism, or those small yard high fences. And again, the European Commission is already talking about potentially upwards of 48% tariffs, an increase from existing tariffs on EVs to the European Union. The Biden administration has talked about 102% tariffs on Chinese EVs. Canada is considering a similar move. So again, while this might be an innovative platform for new productive forces, the EVs, if they don't have domestic demand because consumer sentiment is weak, they need to have an export market. And if the export market is going, the protectionist walls and the tariff regimes are increasing, that could pose a problem to that ambition. So, again, we'll have to see what the third plenum the result of the third plenum on how their strategy is going to play out long term in these new productive forces.
Steve, talk to us about the sentiment on the ground. We know that close to 2,000 participants are right there where you are, and this is a great opportunity for China to lure foreign investments back into the country.
Yeah, absolutely. This is all about restoring confidence post-pandemic. Look, it's not just the pandemic that really hurt China and its access to the world, but the regulatory crackdown that took down Ant Financial, it kind of chopped Alibaba out at the knees. Other, crackdowns on the property sector, as well as online education, gaming, and the like, simultaneously kind of hurt the confidence, the foreign investor confidence, and FDI directly into China. That's without a doubt. Now China is trying to restore that confidence. They're trying to, at the same time, restore confidence in the domestic economy that is hurt badly by that property crisis, which creates about a quarter, if not upwards of a third in the past of economic output and growth in this economy. And it has really sapped consumer confidence. So again, we're going to have to see how the economy plays out. They've offered some policies that have stabilized that downturn that we really saw in January. But again, going forward, Li Qiang feels confident that they will reach the target of around 5% GDP growth. But again, we'll have to see.
Exactly. We have to see. We're just at the halfway mark for the Chief North Asia correspondent, Stephen Angle. At the WEF in Dalian, we thank you so much for that update. Now, staying with China, our next guest believes the country's economy will need more support to reach its 5% growth target. Let's bring in Eli Lee, Chief Investment Strategist at Bank of Singapore. Eli, good to have you with us. Li Qiang says he's confident. Are you?
Right, so I think they have the dry powder to reach the 5% goal if they want to, but they're going to need the political will and the mandate. And the calibrated fashion that they've been proceeding so far tells us that they have been trying to get the grips with the magnitude of the problem. And we think that that's a lot of I think headwinds from the property market right there, and they have to support it.
And in terms of policy, we heard from PBOC governors saying, you know what, if you're expecting massive easing anytime soon, you can forget about it. So the messaging so far from policymakers are that, the stimulus that you're expecting, that you're wanting in the market is not going to happen.
Right. So I think it's been pretty clear over the last 3 years that that's not going to be the approach. I think they are adding straws onto the camel's back, hoping that they're going to reach the last straw. But I think, from what the market's telling us and, from where earnings consensus are moving, it tells us that the risk-reward may eventually be turning for markets. And that's also because prices have fallen so much.
You talk about risk-reward, the bond market. We've seen a stellar run for Chinese bonds. Is the outlook the same for the second half of the year, or might we see a turnaround in that?
Right. So I think most of the easy money has been made, but we've seen a devastating plunge. So a rebound from that levels is not too surprising, given that maybe 12, 24 months ago we were thinking, is there going to be a Lehman-type crisis in China? Is there going to be a 20-year recession ahead? And it's pretty clear by now that that's not happening. So we are seeing some recalibration in price levels, but going forward, like we said, we are going to need more support from the government.
So in terms of recalibration in the stock market, given where valuations are very low compared to a lot of markets around the world, would you be a buyer?
Yes, I think, from a long-term perspective, we are long-term investors. We think that the risk-reward has turned positive. There's still a lot of risk in the market, but that's where I think an investor has to make a call. It's never really clear, and when it is, prices have moved. So I think on the balance, we think that where prices are right now, it makes sense for a long-term investor to be quite selectively taking out opportunities. Selectively?
So where?
Right, we like the consumer sector. We think that the outlook for that is still fairly strong.
Can you name names?
Maybe not at this interview. But I think the tech names we think are interesting as well. There are a few really large tech players right there. They have really strong businesses. And, the cash flow profiles is just astounding. These are businesses that will benefit from the AI boom as well.
It's quite interesting. You have to talk about the yuan. It's been pretty weak, and some say that it's about to get weaker if the yen continues to fall. Your thoughts on where the yuan is headed and what needs to be done for it to remain stable the way the PBOC has been wanting it to be?
Right. I think that the policymakers in China and in Japan, they are trying very hard to, not have too much currency weakness, but it's not all in their hands. Obviously, the yield differential is a big, with the US dollar, is a big factor. And I'm sure they're watching really closely what the Fed's gonna do next. I think the Fed's maybe a little bit conservative right now. We still think they will move in September. That's going to be a big help for the yuan and also the yen.
But some are saying that perhaps, the PBOC will have to widen the daily trading band to take into, I guess, consideration how the yen might move. Some are suggesting the yen could get to 170.
We think that that's possible. The external forces are massive, and I think it may not be prudent for the Chinese policymakers to try to fight that too much. So I think to manage expectations, a gradual depreciation, and I think that's pretty much in line with what the the Japanese policymakers are trying to do as well. All eyes are on the 160 level for the yen versus the dollar, and we think that could well break ahead, actually.
160, 170 more like it. Eli, thank you. Eli Lee, Bank of Singapore. Well, still to come, an exclusive conversation with Malaysia's Minister of Natural Resources and Environment, Nik Ahmad. We'll discuss sustainability and green initiatives with the minister next. Do keep it here with us. And of course, we're leaving you with live pictures out of Dalian, where the World Economic Forum is happening. We just heard from Premier Lee Chang pushing back on a decoupling with the rest of the world. He did say that China is prepared to join hands with the rest of the world, pushing back on perhaps the changes we're seeing in global supply chains. Keep it here with us. This is Bloomberg. Welcome back. Malaysia's May inflation data is due, with economists expecting a slight rise from the last reading. Bloomberg reporter Avril Hong has the details. And of course, Avril, this comes hot on the heels of the cut in subsidies in fuel prices.
Absolutely. So that is what we're going to be watching out for the next few inflation readings. But for the month of May, we are expecting a slight pickup from the month of April. But overall, for Malaysia, this year, it looks like inflation will be pretty benign, given the demand pressures are easing because of slowing global growth, because the government is paring back stimulus. So that could help Bank Negara Malaysia to keep rates unchanged for the rest of this year, especially given the resilient growth prospects that we're seeing for the country. It's really interesting as well, even as we watch out for this inflation print that's due in the next hour, that the ringgit has been outperforming Asian currencies for this quarter, even in the face of broad dollar strength. And this is helped by the buoyancy in oil prices. The other thing that we've been really tracking in the months to come is how that potential upside risk from energy prices will show up in the inflation reading, because it's not just the cut this month from diesel subsidies. We are also going to see potentially gasoline subsidy reductions. That could prompt some pain for consumers, but it is, I think, part of how the government has been fulfilling its pledge to improve finances, and perhaps also a crucial step in the energy transition house.
That's right, and a long time coming as well for Malaysia to cut those subsidies. Errol, don't go away, because we're going to continue talking about Malaysia. The nation is targeting net zero emissions by 2050. Central to that plan is its National Energy Transition Roadmap, which sets an ambitious target of achieving a 70% renewable energy capacity. Well, joining us exclusively now is Nik Ahmad, Malaysia's Minister of Natural Resources and Environmental Sustainability. Minister, good to have you with us. As we're talking about sustainability, I just want to point out that when it comes to climate ranking, though, Malaysia has deteriorated. In fact, it dropped about 3 paces at 59th position, which is the lowest out there. Your thoughts on where progress might be made and how much progress can be made this year?
Yeah, I mean, I think first, thank you for having me here. And we are basically still an oil and gas country. We rely a lot of our resources, revenue for the government from oil and gas. And we also started off as an export-driven industrial economy, which was fueled by blanket subsidies. But what we have done, we have, just in about 2 weeks ago, the Prime Minister has said that we want to reach net zero. Previously, it was as early as 2050, but now we've set it firmly at 2050, and that's a beacon for us. And secondly, we have started with the reduction of or retargeting of subsidies. Last year, we started with electricity tariffs. We've started this year, as you mentioned just now, with regards to diesel. And again, this, I believe, will again be another spur for us to achieve our ambitious goals under the energy transition roadmap. And hopefully, we will rise up the rankings.
Right. The cut to fuel subsidies is, as you alluded to, a key step. But when we look at potential other moves as well in the energy transition and helping businesses and consumers become more cognizant of the negative externalities of carbon, what is the government's mulling of potentially carbon taxation a further step in that direction?
Well, I think that's the thing. We have to do it step by step because as far as Malaysia is concerned, we've had basically we are subsidizing our carbon so far, right? Diesel, before this brown electricity, and we are still subsidizing petrol. So when we want to talk about carbon tax, which I do believe is the reasonable next step, that means that we have to address our subsidies first. So the retargeting is an important first step. And now we need to work on the other parts that we need to do before we go on the carbon tax. And I think we are already discussing whether we can pilot it. The Ministry of Finance is leading the discussion with the Ministry of Trade and Industry as well as with the World Bank to see how we can start carbon tax. And we are looking at potential sectors, the hard-to-abate sectors such as the steel industry.
You've also said before that the fuel subsidies are part of the reason why EVs haven't quite taken off in Malaysia. Given the reduction, to what extent do you think that picture is going to change in terms of uptake of electric vehicles?
We've this year, the government, I think we're going to start the procurement for EVs for government fleets this year. We've seen some major corporates that are starting major procurement for EVs, whether vans, cars, trucks, even motorbikes. But I think the main game changer will still be when we address petrol subsidies, because that's where a lot of our current transportation is based on. So I think we are looking at that, and so then another part is, of course, how do we harness our native or indigenous automotive industry? We have a huge one, whether it's our local brands, Proton and Produa, but we also have other brands that are assembling their cars in Malaysia. Some have started assembling EVs, but if I think the game changer is like the real entry-level brands in Malaysia, if they can provide, and they're working on providing what you call that, EVs below 100,000 ringgit, that will be the major game changer. Things like tax, road tax and whatnot, that has been addressed by the Ministry of Transport in providing a much more competitive rate of taxation for EVs.
Minister, we know that Malaysia is committed to net zero, but it did say that its targets for greenhouse emissions, for instance, are pretty contingent on help and assistance from developed nations. Where are you with that?
Well, we will always talk about climate justice because, I do believe that the developed world has promised a lot. They have delivered very little. But and we want to speak out not just for the sake of Malaysia. Yes, we are a high middle income country, but there are other developing countries that need a lot more assistance. We do receive, for example, we are preparing our national adaptation plan, and that's with some funding from GIZ, from Germany, through the GEF funds. But mainly, for us, we have to rely on a lot of our own funding. So while we call on a lot more assistance, we call on a lot more support, it doesn't have to be in terms of money, right? It can also be in terms of expertise, in terms of capacity building. But most fundamentally, right, we know that, we need to do this. First and foremost, that Malaysia is a maritime nation. We are facing the sea, and any sea level rise will be disastrous. We are already facing enormous impact and losses from heat waves, from floods, so on and so forth. But also we are.
But Minister, can you quantify? Yeah. Minister, can you quantify the financial assistance you have received so far, and how much more would you like to see? Is there a number out there? Well,
now it's really, I think it's loose change. In the grand scheme of things, I think, for example, the National Adaptation Plan is in single-digit million, dollars. But we've did some calculation on energy transition alone. We will the funding needed will go into the trillions, right? So we're talking about a lot of amount of resources, but that is why, at the very least, when we started by addressing the market, by removing blanket subsidies, which I think has hurt our energy transition all this while, then that will make it it makes sense for companies then to take a cleaner alternative, or for consumers to adopt cleaner solutions for energy, for transportation, so on and so forth.
Right, and I think the carbon market development is also going to be a key part of getting to net zero. We see how Bursa Malaysia is next month going to start selling those local carbon credits. And this is via auctions. It's, I think, a good opportunity given how Malaysia is well placed. We see it's got rich forestry, mangroves, peatlands. But how exactly do you see the voluntary as well as the compliance carbon markets developing?
Well, I would love for it to be faster, but the Bursa Carbon Exchange, which was launched by Bursa Malaysia, they launched in December 2022, and the earlier auctions were actually foreign carbon credits. And as you mentioned, we are getting the Kwamut forest carbon credits to be auctioned in July next month. So we're quite excited about that. And there's a lot of interest from various major corporations in the country to be part of that. I think for us, there is a lot of desire for people to see, for the market to see credible carbon credits to be there. And I visited my Thai counterpart to see how Malaysia and ASEAN can learn from Thailand because of their voluntary emission reduction program. That has been something that is totally ahead of other countries, and if we can have domestic or regional standards, which we can, at least recognize within the region, I think that would be something wonderful, because now, it took us a long time to go through Vera and the other international standards. But we will not compromise on the integrity. We will not compromise on transparency. But we do believe that there's a lot of resources that we can unlock in terms of the offsets,
right.
And to help us to protect the forest that we have. We still have 54% forest cover in Malaysia.
Certainly. Minister, what about the standardization between states? How are you engaging with them in terms of how carbon market policy projects should be governed in a way?
Some of the states have showed immense initiatives, and they've been really ahead, in trying to put up certain products. As you know, in Malaysia, land, forests, those are all state matters, right? So we've been engaging with them closely. We have the Climate Action Council, which is chaired by the Prime Minister. And that was where recently we firmed up on our 2050 targets. And it was decided that, at the end of the day, because of our the fact that we are party to the Paris Agreement, our reporting to UNFCCC, to COP, that means that, we need, and we are responsible for the nationally determined contributions for Malaysia. So the ministry will be the focal point, right? But so the idea is we are preparing the policy and we will set the standards. But then the rest, we leave it to the states on how they want to take part. And I think, some states are faster than others. And the idea for me is always on how the states that are doing well, they can, share what they're doing, the best practices with the other states. And hopefully, everyone can benefit from this.
Minister, the U.S. is crying foul. It says that it plans to investigate Malaysia for its solar panels, which they say have been unfairly subsidized. I mean, what impact do you think this will have? We are an open trading country. We trade with everyone. We are one of the world's biggest solar panel manufacturers. Obviously, it comes from a lot of companies, whether they are based in China or based in the US. So, we will cooperate with whatever investigations that goes on. I mean, we face that in other industries as well.
in the country. But we are quite confident, that we try to abide by all the rules and regulations that are out there. But if there's any problem, we would definitely address that, because Malaysia, we rely on trade and we rely on manufacturing.
Minister, thank you so much for your time today. Nick Ahmad, Malaysia's Minister of Natural Resources and Environmental Sustainability, and of course our very own Avril Hong for the interview. Now, let's take a look at where markets are right now, edging just a tad higher, defying what we saw on Wall Street overnight. Plenty more ahead. Do keep it here with us. This is Bloomberg. Taking a look at where China is trading right now, it is in negative territory, of course. Further signs of pressure on the economy. The CSI 300 index down 0.4%. Avril Hong on top of developments. Avril.
Yeah, so we are seeing a bit of a reaction in the Chinese currency after the Premier's comments on confidence in achieving the growth target for this year. I'll get to that in a bit, but let's see how the AI-related stocks are faring today, because in equities, remember, it was that correction in NVIDIA, a 3-day sell-off that wiped out about $430 million in market cap. Most of the AI stocks in the Asia-Pacific are down today, and we're seeing much of the same on the mainland, though the CSI 300 also is down about 0.4%. It is interesting that you don't get that much of that AI distortion. So compared to some of the other Taiwan, South Korean benchmarks, the impact from these stocks might be a bit more muted. But let's flip the board and take a look at the Chinese currency, because we have been seeing weakness and the onshore yuan has been hovering ever closer to that 2% limit, the upper end of that trading band. Today, we see the PBOC coming through with a weak yuan fix, perhaps easing its grip on the currency. The authorities might be liking a weaker yuan because of what this might mean in the boost to exports, especially given the trade tensions and what that might mean about the cloudy outlook for trade, exports in the country. Despite all this, though, they might be a bit hesitant to encourage speculation, one-way bets, so that could go some way in explaining why this week we saw those weaker than expected fixes on the yuan, but we did get some stronger ones last week. So this is what we're seeing on the onshore yuan, but also wanted to highlight something in terms of how it is closely related to the performance in the Japanese currency. And of course, for the yen, it's not 160 that we're looking at anymore. Some traders think 170 is the next level to watch, because there isn't really anything to keep that momentum on the downside for the Japanese currency. And given how closely related they are, the next level we could be watching on offshore yuan might be 730, and that could put some pressure as well on the onshore currency. Has.
Pressure on the yuan, pressure perhaps on the Korean won as well. Avril Hong, thank you. Now, Beijing is said to be floating benefits for Germany's luxury car makers if Berlin convinces the EU to drop tariffs on Chinese EVs. China correspondent Min Min Lo joins us now from Hong Kong. Min Min, what more do we know about the negotiations between China and Germany?
Yes, so China is now floating the idea of lifting the existing 15% tariffs on vehicles with large engines that are imported from Europe. And this will target companies like BMW, Mercedes, Volkswagen as well. This is really Beijing's effort to try to dangle both carrots and sticks in front of Germany, because previously we know that Beijing had hinted that it could unleash 25% tariffs on those very same vehicles. Now, Germany, of course, has been one of the strongest critics of those those EV tariffs, saying that it could spark a trade war. And we know that Germany has this massive auto industry that could really pressure the government to perhaps break ranks with the European Commission and convince other member countries to do the same as well, just by leaning on its weight as the largest EU economy here. And the German Chancellor as well, Olaf Scholz, previously saying that he is keen to see a negotiated outcome. He says that there is still time ahead of the July 4th deadline when the provisional tariffs will kick in, but we're really just less than 1.5 weeks away, so time is ticking fast. But of course, there's a wild card that the clock could stop ticking as well, because some analysts said that the EU could consider postponing those tariffs until negotiations are concluded.
And enter Canada, Min, clamping down on imports of Chinese EVs as it aligns itself with the Biden administration on trade.
That's right. So Canada has just announced that it will be starting this 30-day public consultation period, which is really the first stage before it can impose any tariff on Chinese electric vehicles. And it's not just tariffs that are in focus. The finance minister said that they will be looking into perhaps increasing restrictions for investments into the EV sector in general, and also perhaps adjusting the eligibility criteria for vehicles that qualify for this federal rebate program, which currently applies to electric vehicles from China as well. So pretty sweeping changes that could come for Chinese EV makers. But of course, the short-term impact is likely to be close to zero, because Chinese EVs don't have a huge market share in Canada right now. But perhaps the intention of this is really to align with the US to prevent Canada from being a side door for Chinese EV makers to enter North America. Because remember, Canada has that free trade agreement with America and with Mexico as well that is coming under review in 2026. So there is a lot of pressure for Prime Minister Trudeau to really align his China policy with the US, especially given that the auto sector in Canada is so tightly integrated with the American supply chain.
That's right. EVs increasingly a trade issue. China correspondent Min Lo, thank you. Now let's return to our coverage of the World Economic Forum's second biggest meeting of the year in Dalian. Our Chief North Asia correspondent Stephen Angle is standing by with our next guest. Steve.
Hey, Haslinda. Yeah, Fred Hu is Primavera Group Chairman and CEO. He joins us now. Fred, always great to see you. You just came out of the plenary hall listening to Li Qiang. He reiterated the confidence in achieving the growth rate of around 5%. He laid out some of the things that, as a private equity investor, you probably like as far as innovation and new areas of growth. What really stood out to you in his speech?
Well, first of all, it's clear that, Premier Li now feels more confident that the Chinese economic recovery is gathering momentum, and he's confident about hitting the 5% GDP growth target for 2024. More importantly, he also has, I would say, reiterated the government commitment to a free market-oriented economy, foster more competition, level playing field for private sector, and to foster entrepreneurship and innovation as the most important driver for China's economic growth.
Did you hear what you wanted to hear as an investor, potentially in new productive forces, what the government is putting their weight behind in new energy vehicles, into batteries, into solar? What do you want to see as far as making it a open environment for your pools of private equity to invest in?
Well, the enthusiasm the Premier has shared about, his enthusiasm about, fostering new technologies and innovation as the key engine for economic growth in China, I think it's quite reassuring. This new jargon of new, quality productive forces really just mean, China can no longer rely on labor input, can no longer on more fixed asset investment. requires on productivity, and the source of productivity growth is through innovation, through technological progress. I think that shows the Chinese leadership actually understands the theory of economic growth.
Yeah, and it has to be less reliant on property as a main driver of growth.
Totally.
But you feel confident in some of the measures that have come in the last couple of months from the central government? How so? What gives you that confidence that they could be cleaning up this mess that they're in? They've avoided some defaults in some private large developers, but still the confidence is pretty weak.
I agree. I think housing, specifically about housing, I have noted some of the recent measures taken by the government. I think those measures, can be helpful, but I would be skeptical in their own. They could just once and all resolve the housing problem. This is going to be a multi-year process regardless. It's not going to quick overnight fix at all. But I think it's important to remember Chinese economy is much more than just housing. Okay, housing
it's
has
about a quarter of it.
Yeah, a quarter is significant, but it's still, right? So it's a serious drag to the economy. But if China can manage to get the rest of 3/4 of the economy work, and realize our nation's potential, then China can still achieve pretty solid growth.
What would you like to see, and what do you expect to see from the third plenum, which is essentially 6 months delayed when it should have happened last autumn? The Central Committee will get together. The top 200 or so officials, 300 officials, are going to come out with their long-term planning. What is needed?
First on timing, better late than never. And the second, what's needed actually is not, it's not a rocket science, right? China does not need, earth-shattering, Big Bang, new theory. It's just more of what, has proven the right model for China is really more reform, more open up, the continue, progress or accelerated progress towards a truly functioning modern free market economy based on private property rights, based on entrepreneurship, competition, and openness to the rest of the world.
But then how do you get off the cocktail of property development as a main driver of growth? I mean, we've already taken it down at the knees, but again, the government is coming out with, I wouldn't say welfare policies, but essentially to ask state-owned enterprises as well as local governments to come up and to buy up the excess inventory and basically repackage it into affordable housing. Is this a feasible plan given Xi Jinping and the central government does not want to exacerbate debt, especially at the local government level? Doesn't this add to their burden?
Possibly, so housing I think is a big problem, as you mentioned. So it requires all kind of, proven measures that we have seen else in the world, or maybe some new measures in the Chinese context, right? So only time could tell whether those measures are sufficient. Or without the long-term, negative consequences. Yeah. But again, I just want to really get the people's attention away from just housing. China is far bigger than just about housing. Okay, housing is important. I think the whole set of preliminary you mentioned, or Mr. Lee's messaging, about the innovation. Free market economy, right? You have a boom or bust. Housing is the best example. It happened in the U.S., happened in Japan, and in Europe. Here in the rest of Asia.
It sort of had to happen, right?
It had to happen, exactly. It's excessive optimism, overbuilding, expansion. Then, they find that the head of the housing price has to come down. Inventory has to be cleared out, right, to restore a new equilibrium. But what I think is important is really, really unleash new productive forces. So in the new industries, right? Whether it's artificial intelligence or the energy transition, and in case of China, it's also service economy, which is still underdeveloped, right? China has a world-leading manufacturing economy, but the service, is a mean now, right? So now with the highly educated population, with the urban middle class, the demand for services, for example, healthcare, right?
Yeah.
It's huge, it's massive. So I think the Chinese government just really need to make sure to create the environment where new business creation, startups, innovation can take place.
Is the confidence returning, though? Confidence was sapped at the small to medium-sized enterprises, in particular, during the pandemic. There was no, safety net. There was no lifeline for companies that had to basically deal with 0% revenue growth through the COVID zero times. Really hard time. Do you see signs that there is confidence returning? It's not necessarily in the stock market. It's not in property developers, and I know I've gone back to property, but are those small to medium-sized enterprises that want to tap into these new productive forces and be innovative, is the confidence still lacking? Household confidence is still lacking.
I have seen clear signs of improvement in confidence across the board, not just the private sector in general and the SME, small medium-sized enterprise in particular, but also, even in the investor in financial markets, I've seen investor confidence slightly picking up. Okay, and of course, consumer confidence is also important, right? Holds the key to demand. Is also picking up. So, granted, they are not at a level where I would like to see. Right? Yeah. If they are really going back to the normal, then there's no worry about the Chinese economy. It's going to be a very powerful, self-sustained, big economy, okay? And a major contributor to the global growth. But as we speak, confidence is still a concern, okay? It's not back to the normal before the pandemic, before last few years' difficulties.
Obviously, the geopolitics, is really focused in on the overcapacity issues. And some would also argue that if the central government is saying we are going to prioritize batteries, solar panels, and EVs, money flow should go into there. But again, there's no outlet for, or very limited outlet for exports because of the rising protectionism and the rising tariffs. You are a strategic investor. Would you invest in EVs at this time when they're not profitable at home and their export markets are shrinking?
Yes, I'm still very focused on the whole energy transition sector. We have been a significant investor in that space and very successfully. I can see some of the challenges right now at this particular point in time. But, Chinese energy transition does not depend on exports, okay, because China itself is the biggest market in the world, right, in terms of new investments, in terms of consumption. EV, for example, every 2 EVs sold in the world, 1.3 sold here in China, right? So there's huge demand here at home. But of course, the dominant place, like anything, just when people see the attraction of EV, that has a lot of new investment, new projects breaking ground, right? So temporarily, that may have created overcapacity. But, demand is going to pick up because the penetration, China is the highest in the world, right? But still, there's a long way to go to phase out the ICE, traditional vehicles, completely, right? Like still take a lot of new EVs come on stream. And, when Janet Yellen comes to China and say, lecturing Chinese about the overcapacity, she's a great economist, but she took a very myopic, narrow view because no country is self-sufficient, right? It's always for the global markets, based on competitive advantage, right? Right now, for energy transition in general and the EV in particular, China is arguably the most efficient, the lowest cost producer, right? So actually it's good to have open markets, not only Chinese EV to produce, to serve Chinese customers, but also serve European, North American, and customers around the world.
All right, Fred Hu, I will tell Janet Yellen you said she's being myopic, okay? No, I'm just teasing. Thanks so much for your time here at the World Economic Forum. Who knows? Sometimes we're all a little bit myopic, right, Haslinda? Not you, though.
That's right. And we know Fred, who has great insights on China's economy. I mean, his insights have always been relevant to our investors. And of course, he says confidence remains an issue and is not yet convinced that those measures implemented to solve China's housing slump will work. Stephen Angle, we thank you so much for your insights today as well. Now, the time check is 11:46. India's been trading for about 1 minute. Let's take a look at how it's shaping up for the Indian market. Remember, this is a stock market that's now valued at over $5 trillion. It's challenging challenging Hong Kong for the fourth largest spot globally. It is an up story for India like the rest of the region. Plenty more ahead. This is Bloomberg. Now, Bloomberg has learned Indian regulators are probing employee trades for possible front-running at a fast-growing mutual fund with $11 billion of assets. It's putting a fresh spotlight on attempts to police the country's booming stock markets. For more, let's bring in our Asia equities reporter, Ashutosh Joshi in Mumbai. Ashutosh, talk to us about the latest on this investigation.
Sure. Quant Mutual Fund is among India's fastest growing mutual funds. In barely 4.5 years, this mutual fund has raised its assets to more than $11 billion. It has more than 8 million investor accounts. Obviously, the latest reporting on investigation for potential front charges is something that comes as a surprise to many investors. And mutual funds in India are emerging as a key source of liquidity to the country's stock markets. Hence, regulators are very cautious about this space, and the latest investigation points at similar efforts.
Is there a broader concern about the mutual fund industry for the regulator?
Yes. As I said, mutual funds are bringing a key liquidity to India's equity markets. For almost last 3 years, every month, equity mutual funds have seen net inflows from investors. In month of May, we saw more than 4 billion worth of inflows coming to equity mutual funds. The monthly recurring accounts that invest in equities every month brings more than $2 billion worth of investments per month. That's big money. It is a fundamental shift in use of household savings, wherein equities are looking to expand their share of this big money. This makes regulators as well as the government more concerned about any cases of malpractices in mutual fund industry. The latest case came from the regulator surveillance mechanism, wherein certain trades by this mutual fund were noticed, and the mutual fund has admitted that it has received certain inquiries from the regulator and is looking to help with the investigation.
Asia equities reporter Ashutosh Joshi, thank you for that. More ahead. This is Bloomberg. Well, veteran investor Mark Mobius told Bloomberg's latest Tiger Money podcast that traders need to widen their scope as the world of opportunities grows.
I think it doesn't make sense to just say, okay, I'm just going to go into India or go into China or go into emerging markets. You got to look global. And of course, yes, emerging countries are growing faster than the developed countries. No question about that. It's double the growth rate. So therefore, there's going to be more opportunities in the emerging countries, but there's so many companies listed in New York and London and other developed markets where the companies are actually emerging market companies because their earnings are from the emerging countries like India, China, Brazil, and other countries like that. So we've got to widen our scope if we want to be good investors.
So I'm wondering, what is the argument, or what's the best case you can make against U.S. exceptionalism? That, you know, that there is a case to be made to be long EMs and simply not just leave your money and close your eyes and wait, say in an S&P 500 ETF, for example.
As I mentioned, the S&P 500 now contains so many companies that are benefiting from the growth in emerging countries. So you've got to be aware of the fact that when you buy Apple, you are buying not the U.S. market only, but you're buying China, India, et cetera, et cetera. So these countries are enabling the American companies, the multinational companies, to earn greater and greater profits. And therefore, their stock reflects that.
So this your Mobius Emerging Opportunities Fund that's about to come online. Are you saying that it's everything is fair game? So a company like Apple, which you correctly point out, you're effectively buying an EM stock if you think about it longer term, because increasingly their pie is China, India. Tesla is another one, for example. Would you be would the S&P 500 companies or would stocks in the U.S. be part of your eligible investment universe? Is what
Yes,
I'm asking.
definitely. Yes, there's no question about that. And don't forget ADRs. Lots of ADRs are listed more and more. You're going to see emerging market companies listed in New York because of liquidity.
Mark Mobius, Chairman, Mobius Emerging Opportunities Fund, speaking with our very own David Inglis. Well, that is it from Bloomberg Markets Asia. Horizons Middle East and Africa is next. Do keep it here with us. This is Bloomberg.